Hello everybody, this is Toni Turner and welcome to the market now as of about noon 30 Eastern on Friday, June the 1st. Well, U.S. stocks are nicely higher today after the latest monthly jobs data indicated strength in the U.S. economy and cemented expectations of at least 2 more rate hikes by the Federal Reserve this year. Technology stocks are leading the rally with gains in behemoths such as Apple, Microsoft, and Alphabet, lifting the S&P Tech Index to a record high. Government data showed the U.S. economy added 223 jobs in May. The data also showed a drop in the unemployment rate to an 18-year low of 3.8%, pointing to rapidly tightening labor market conditions. And on that cheerful note, and it is certainly cheerful, let's go on and look at 3 stocks, or 3 charts, I should say, that will give us some insight into the week to come. Now, first of all, as we usually do, we're looking at our chart of the S&P 500 Spider, symbol SPY. This is a daily chart of the exchange-traded fund that closely follows our S&P 500 index. Now, we've had a very volatile ride since January, certainly into the first half of this year. And when I captured this chart today, the SPY was trading at $273.43. That's about $27.34 on the S&P 500 itself. Now, we've had a lot of volatility, as you can see, from the first of the year. And volatility, really, you can kind of eyeball volatility. You can see in the uptrend that we had since October 2017 that you can see on this chart is what I'm pointing to. You can see how the days, each day was relatively a narrow range day. The pattern was very, very orderly. Then we got to this all-time high of $286.58 on the SPY, which was about $28.65 on the S&P 500 itself. And then the SPY, as we're going to say, got too far over its skis, and the bears came in, and the volatility, the really wide price swings you see every day since then. And if you've seen volatility, what you're looking at is the bulls and bears fighting. The bears can push a candle or price all the way up to a real big high. Then the bears push it back down. The bulls push it back up. On some of these big red candles, it would open at the high of the day, and the bears would push it much lower. So moving through February, March, and April, and now we're into May, now you can see the candles are getting a little smaller again. Volatility is evening off, and what we have here currently is a consolidation in the SPY. It's kind of standing on the curb, looking both ways and saying, now, after all of the rabble-rousing, after all of the big partying, now what do I want to do? Now, of course, we did have a fall down here at the beginning of the week. We did have a beginning of the week on a drop on Tuesday because of Italy's instabilities. And yesterday, Thursday, we had a little drop on the back of new tariffs we're imposing with Canada, Europe, and China. Still in all, we've got a consolidation zone, and the S&P looks happy again today. When I captured this chart, the SPY was trading at $273.43, still in this consolidation. Again, standing on the curb and looking both up and down, the SPY is deciding if it maybe wants to, over next week, slip lower down to the 50-day moving average, the green line, at 266.95, or could it even head lower to 263.63? That's for the 200-day moving averages coming in, and we see this lower uptrend line coming in at about the same place. So that makes this $263 pretty strong potential support for the SPY should it fall to that. Or could the SPY rally this week Could it break higher over the tops of this consolidation at 274 and maybe break up over this uptrend channel line and heads back toward 280? And of course, we're not going to know until the week actually takes place. It is best, of course, if the SPY stays above the 50-day moving average at 200, and we'll call it $267. But again, we're going to have to wait and see. So stay tuned. Stay tuned for probably what could be an exciting week next week as to see whether the SPY rallies or whether it has to give up some ground and head back to further support. So again, we'll stay tuned for that. Our next chart today is a chart of the PowerShares QQQ. As you all know, this is the ETF that closely follows the NASDAQ 100. Its moves are fueled by the likes of Amazon, Microsoft, Intel, Apple, Google, Facebook, Netflix. Now, the QQQ made an all-time closing high on March 12th at $174.08. When I captured this chart today, the QQQ was trading at $172.57. The reason it's flying higher today is because Facebook, Amazon, Microsoft, and Intel are all making new all-time highs today. So that really lifted the Qs up and out of its consolidation zone that it's been in for a little while here, a couple, 3 weeks, and it's finally popped out of that zone today, which is very, very much a positive. It has been working its way through a short-term uptrend, as I pointed out to you last week, through the month of April, and it's continuing again its uptrend today. It is above, as you might guess, its 20-day, the red line, 20-day moving average, and the green line, the 50-day moving average. 50 days now coming in at 164. Now, we'll see if it can continue its uptrend in the coming week. Can it break above this upper channel line at 174 and head back to its all-time high at about 174? Can it do that? Will the text remain positive again, or will it slide lower? Of course, we want it to stay above the 50-day moving average, the green line coming in at $164, and also that meets up with this lower uptrend line we'll see, which makes it a double duty here of support, which could be strong if we need it. So right now, it all looks positive, and fingers crossed it continues to be that way in the coming week. Our final chart for the day is a chart we haven't looked at in a long time. This is a daily chart of the SPDR S&P Retail ETF, symbol XRT. The XRT has 85 holdings. Some of the top holdings are Tailored Brands, Guess, Finish Line, Foot Locker, DSW, of course that's shoes, Macy's, and TripAdvisor. Now, it made, and you can't see it on this chart, it made an all-time high at about $51 in March of 2015. The high you can see is on this chart. It made a January closing high this year at $48.91. Now, from there, it fell down to lows at the end of March and early April, right down to about $43, just above its 200-day moving average. Now, since then, it's working its way up into a short-term uptrend here. And it makes sense to me with unemployment at an 18-year low. It kind of makes sense that people do have more money to spend. So if the SPY, if the S&P 500 and the market in general stays positive in the coming week, I may look at, I'm going to keep an eye on the XRT, and if it remains strong, preferably above this red line, the 20-day moving average, I may buy a small position. Now, when I captured this chart, the XRT was trading at $46.50, and the 20-day moving average was coming in at $46.11. Now, down here, you see the 50-day moving average coming in at $45.16. Again, if the XRT remains positive in the coming week and the market remains positive in the coming week, I may buy a small position of the XRT. And if it's able to rise above this current consolidation zone, and that's up right about at 47.40. If it can rise up above that, then I would add to my position. And there are those of you who may want to wait and see if it can rise above this upper channel line as well. So there's different ways to do this trade. But again, if it stays positive in the coming week, I may add a small position and then add to it if it's positive. As usual, at least for my initial protective stop, I'll be using a stop if the XRT closes below the green line, the 50-day moving average, which again is coming in now at $45.16. So I'll use that as my protective stop and then turn it into a trailing stop if and when the XRT moves higher. So keep an eye on the XRT in the coming week. It may be something you want to look at. And now for the coming week's economic reports. But first, please join us this coming Monday, June 4th, for our next session of Toni's Market Club. And by the way, we've been doing Toni's Market Club for more than 9 years. We will talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. We have a great group of people in Toni's Market Club. If you can't attend the live session, no problem. The recording is available to you just a few minutes after the session ends. For more information and to join, go to tonismarketclub.com. And now on to the coming week's economic reports. There's always a week in the month, and I tell you this, that we have very few economic reports, and that is one of those this coming week. Monday, not much going on in economic reports. Tuesday, we have ISM, or Institute of Supply Management Services. Wednesday, we have our usual crude inventories. Thursday, we have our usual jobless claims and natural gas inventories. Not much going on Friday on the economic front. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.